Have you ever noticed that most people don't feel broke when they buy things? They feel broke after everything is already locked in. Not after a shopping spree, not after a vacation, but on a random Tuesday, looking at their bank balance, wondering where a decent income went. That's usually not overspending, it's overcommitting. Let's make this concrete. Imagine a fairly normal situation in the US or Europe. You're in your late 20s or early 30s. You earn the equivalent of about $70,000 a year before tax. After tax, health insurance and social contributions, maybe $4,000 a month actually hits your account. On paper, that sounds fine, above average even. Now, life starts filling in the blanks. Rent or a modest mortgage takes $1,400. A car payment or lease takes $450. Insurance, fuel, maintenance, call it another $200. Student loans or education debt, $300. Phone, internet, subscriptions, $150. Groceries and basic living, $500. Before anything extra, you're already around $3,000 committed. That leaves $1,000. And this is where the illusion starts. That remaining money feels flexible. It feels like freedom. It feels like spending. But psychologically, it isn't. Because out of that $1,000, you still have clothes, social life, small trips, gifts, emergencies, and the quiet expectation that you should be enjoying life at this income level. So you swipe your card. You don't feel reckless. You feel normal. The mistake isn't buying things. The mistake happened earlier, when fixed commitments quietly consumed your future options. Overcommitment is dangerous because it hides behind responsibility. A car payment isn't impulsive. A nicer apartment feels earned. Subscriptions are only $15 each. But fixed costs don't stay fixed in your life. They stay fixed against your future self. Let's do simple math. That $450 car payment isn't just $450. Over 5 years, it's $27,000, not including insurance and upkeep. The extra $400 you pay to live slightly closer to work, that's $4,800 a year, after tax. Closer to $7,000 pre-tax income you must earn just to stand still. And here's the part most people miss. You don't experience these costs as pain. You experience them as normal. Psychologically, humans adapt quickly to recurring expenses. Once a payment becomes automatic, it stops triggering caution. Your brain treats it as non-negotiable, like gravity. So when stress shows up, you don't question the structure. You blame the income. I just need a raise. I need a better job. I need more money. But many people earning more are just financing a more complex version of the same trap. Financially intelligent people don't think in terms of, can I afford this monthly? They think in terms of flexibility. They ask quieter questions. How hard will this be to undo? How much future freedom does this remove? What part of my income becomes untouchable if I say yes? They don't avoid comfort. They avoid locking it in. They understand that wealth isn't about having more things. It's about having fewer obligations competing for your next dollar. Over time, overcommitment does something subtle but serious. It turns income into maintenance. Raises disappear into fixed upgrades. Savings feel optional instead of structural. And years later, people wonder why they worked so hard but feel financially fragile. Not because they were careless, but because they committed too early, too permanently to costs that don't grow with them. This isn't about guilt, and it's not about living small. It's about seeing money clearly. Spending is visible. Overcommitment is quiet. And quiet habits are usually the ones shaping your financial future. If this way of thinking helped you see your situation a little more clearly, you can subscribe for more calm, realistic conversations about money and modern life.